surprisingly, detailed budgets really help. Because if you have a budget, if we do financial management systems, right, with our QuickBooks clients, you want actionable reports. If you're not doing a budget, if you're just looking at a P&L and you're not looking at budget versus actual, first off, that report's not actionable. You don't know where to focus. You look at your payroll expense, it doesn't tell you anything. But if you look at budget versus actual, all of a sudden that report becomes actionable. Now I know I got a shortfall in revenue against what I expected to be there. It also gives you the opportunity to flag that if somebody spent $683 on an AT&T bill that you weren't expecting, you're going to see a variance. The bill is usually $800 and now it's $1,400. Why is that? So we suggest a budget for a lot of reasons. It's the difference between success and failure. A lot of businesses struggle. It's because they're driving blind. They're trying to make decisions based on the bank account or just a basic income statement.
As you've built up your business for good cash flow, you have money in the bank, one of the worst things that can happen is to go through financial fraud. And this typically happens from an employee internally doing this to you. In today's interview, I'm talking with Stephen King from GrowthForce. And we're going to be talking about how you can spot employees committing fraud. Now, there's typically 3 things that motivate them. You're going to understand clearly what those 3 things are and how to avoid them. We're also going to be talking about how to reduce risk so that you can put up systems, processes, and people in place so that this doesn't happen. It doesn't cost a lot of money. It doesn't actually take a lot of time. It just takes some organization, some architecture in the right way. It's an incredibly valuable episode. So I encourage you first to listen to the episode. Second, if you like what you hear, go to growthforce.com and take a look at the resources that they have. I'm not an affiliate. I'm not compensated. I just wanted to put this out because I found it very valuable with what's coming up. Here's why it's so incredibly valuable, because so many businesses are going under right now, and a lot of margins are being shrunk, and a lot of people's personal incomes are going through the absolute most abysmal times. Because that happens, people are going to be desperate and they're going to do dumb things. I want to make sure that prevents anyone from attacking your businesses. So let's jump straight into the interview, and I hope that you get a lot of value out of today's conversation. Stephen, this is part 2. We've had a previous podcast interview. It was so well received from the audience that we wanted to come back and dive into a separate topic about fraud. And we've obviously, all seen the headlines of large corporations facing fraud. But I think the ones that are more concerning are these small companies that the owner wakes up one day and realizes that they don't have accounts, funds in their account. And we want to prevent that. So I want to welcome you to the podcast again and look forward to gaining some knowledge.
Thanks, Spencer. It's great to be back.
Because you are in this industry, you're at the cutting edge, you're at the bleeding line. And last week, there was a new report that just came out that touches on fraud. So let's start from there, and then we're going to dive into protections and things that we should be watching for as business owners as we grow.
Sure. It was in the last month or so, the Society of Certified Fraud Examiners does a biannual report to the nation on occupational fraud. It's basically the definitive guide on what's happening in small and large businesses. And desperate times create desperate people. And this report looks backwards. It's the 2020 report, and it's an update from the 2018 report, but it shows consistency here that the median fraud amount is $125,000 in companies under 100 employees, and the reason it's just a massive amount. It takes 14 months for that to get detected. 89% of the people who are caught are first-time offenders. They're never had a rap sheet, right? They've never gone to prison. They've never done this before because they're not professional criminals. They are trusted office managers and bookkeepers and controllers who, the business owner has to trust somebody. And if it's not your spouse, it's difficult to be able to focus on running the business without having somebody that you can trust. But what happens is there are three conditions that are traditionally present when somebody's going to steal. There's an incentive. There's something that's happened in their life. Their spouse lost a job, which is what we're going to see a rise of now that unemployment's at 11%. People are experiencing financial difficulties due to an ill family member. We've seen it where suddenly a mom or dad has come into the household and the health insurance isn't covering it, and they're just desperate. They're living beyond their means. They're going out and buying stuff that they shouldn't afford, or they have control issues. Don't worry, I got it all. I'm the only one who can access the QuickBooks file, and I run the payroll, and I do the bank rec, and I pay the bills, and I want to make sure that everything is right. Those are kind of the 5 big warning signs that you see. And there's a couple of red flags that everybody should be aware of, because this is going to get worse in the next year as the economy starts to tumble. The first here is, let's talk about the control issues. The simplest way to help reduce the risk of fraud is through separation of duties. This is called internal controls. If you're an accounting geek like me, the way you reduce fraud is set up those internal controls by separating the person who creates a transaction from the person who approves the transaction, and separate it from the person who reconciles the account behind those transactions. And what does that mean? Like, let's look at the most common form of fraud here is, bill payment fraud. This is a big one. It's a situation where people are paying their own bills in addition to the company bills and just burying it in there. We had an example this past 6 months where a bookkeeper had a client, and what we do is we do outsourced bookkeeping, accounting, and controller services for companies that use QuickBooks, Xero, and NetSuite. And it's all a la carte. So you pick and choose what you want to keep in house and what you want us to do. And in this case, client's doing the billing and the bill payment, and the bookkeeper submitted her own AT&T bill for $673 in addition to the company's AT&T bill. By separating the person who enters the bills from the person who approves the bills, that would be the owner. And then the third separation is separating the person who reconciles the bank account. You get a second set of eyes looking at each transaction. In this case, the bookkeeper paid the bill. The owner approved the bill. He just signed a check to AT&T. He doesn't look at the underlying support. The bill is, if he paid it twice to AT&T, well, he wasn't going to remember. But when our accountant was reconciling the bank account, they saw a second AT&T bill. We ended up reaching out to AT&T when the business owner says, no, I didn't open up a second account. It turns out that this woman's husband lost his job. It was after Christmas, so the credit card bills had come in, and their kids had been home all Christmas and streaming Netflix on their iPads that they got for Christmas, and they didn't have an unlimited data plan. And all of a sudden now, they were already struggling to pay the credit card bill because their husband had lost the job, and now they've got this big unexpected surprise. So she just stuck it in. She said, I was just going to borrow it. I was going to pay it back. And that's what happens. It starts out with a small amount, and then nobody notices. And that triangle of the conditions that are present when somebody commits fraud is an incentive. My husband lost his job. An opportunity. Nobody's looking anyway. And then what happens is people rationalize their behavior. Oh, they're not paying me enough. I'm just going to borrow it and pay it back. Or, the business owner puts his own personal expenses through. And so, why shouldn't I? Because I've worked hard for this guy for 12 years. And that's really what we see. If you don't separate those duties, if the person who's writing the check is also reconciling the bank account, you've increased your risk of fraud. Does that make sense, Spencer?
Totally makes sense. Yeah. I want to start with this. Does it typically start with a small payment, a personal payment that's injected into the bookkeeping and billing?
Yeah, well, it starts actually with a tone at the top. I was at Ernst & Young and specialized in internal controls. And um, there's a whole concept here called crime, right? Interestingly enough, right? In this report to the nation from the Society of Certified Fraud Examiners, they reference what the AICPA did. The highest body of the accountants did was they said, you have to understand your level of risk. So they came up with this crime metaphor. The Committee of Sponsoring Organizations, the COSO Act is what they call it. And they said is you have to have control activities. Number one, is there a proper separation of duties? You have to know how much risk you've got, by looking and saying, okay, if we're a small organization, then we're not going to spend $45,000 on another bookkeeper to reconcile the bank account, but I might spend $400 a month to have my CPA do it for me. You need to make sure that you've got controls over the information. So that's, control is C, R is risk assessment, I is information. So, who has access to the QuickBooks file? And does each person have their own login so you can have an audit trail? And then monitoring. Is there somebody who's looking out to make sure that people are doing what they're supposed to be doing? Is there an oversight at least annually? But the E is the one that I want to emphasize about where do you start? This is the control environment. It starts at the top. Is there a tone at the top where conflict of interests and code of conducts are put in place? If you're ripping off your clients in the IRS and you're trying to, squeeze every nickel out of every employee, and you just have this attitude of, it's us versus them, that's going to become the attitude that prevails through the organization. If you're submitting, I had one client who got ripped off. What happened was the person who was the second biggest way of getting fraud is cash fraud, right? If you got cash in your business, you got to be especially vigilant. When people would come in and pay cash, the clerk, it was a masonry company, the clerk was deleting the invoice and pocketing the cash. They wouldn't have known. They found out when somebody came back and tried to return one of the bags of cement, and they looked in the system and said, we don't see this here. And we got called in to kind of do a forensic audit there and look at the QuickBooks file. We could see who deleted it. We could see why. When they were being charged, they're like, oh, well, the business owner, buys big $60,000 guns and he goes on hunting trips and all that gets expensive. And and I can't take $500. It's an attitude. It's a mindset. So that's really where it starts. You have to set that example. But then you got to look at where are your risk transactions. Cash is a big one. Another, and we see this all the time. It's not just in the papers. Most of the time, it's people want to keep it quiet because they're embarrassed. So you don't hear about it, but it's really prevalent. A medical practice where, we came in and said, you should require mandatory vacations. You got to have at least, a week's vacation twice a year for your accounting staff. Just have somebody else step into their role. And customer came in when the office manager was on vacation. She was working the front desk, and she went to pay patient, and she said, here, I'm going to pay cash so I get my 10% discount. And the woman who was kind of the patient administrator is like, we don't take cash. She got really pissed off. She goes, no, I want the discount. Turns out that billing clerk was pocketing the cash and just making that transaction disappear in QuickBooks. So you've got to make sure that you understand your risk. Do you have those separation of duties? Again, it's the person who enters the bill needs to be separate from the person who approves the transaction. And then whoever does the reconciliation at the end has to be yet a third.
So once you spot fraud and you guys are doing your forensic accounting, what are the typical next steps that you're going to suggest? Because I imagine you're not getting involved with litigation itself unless you're having to be through a deposition, but help us understand that.
So first, you start with physical safeguards. You got to make sure that you are locking down access to information on a need-to-know basis. In QuickBooks, the Enterprise Edition in particular and online has some really good internal control features where you can, on the enterprise level especially, you can lock down access to information at the screen level. So someone who has the ability to create an invoice should not have the ability to delete that invoice. because that's how you make that customer invoice go away. You've got to make sure that I mentioned mandatory vacations. One of the things that we do is we make sure that we suggest is that you make sure that you're doing simple things like background checks on every employee that you hire. These are cheap, but you want to see if anybody, has bad credit, has bounced checks, has left a job before, that is different from what they put on the resume. Surprisingly, detailed budgets really help, because if you have a budget, if we do financial management systems, right, with our QuickBooks clients, you want actionable reports. If you're not doing a budget, if you're just looking at a P&L and you're not looking at budget versus actual, first off, that report's not actionable. You don't know where to focus. You look at your payroll expense, it doesn't tell you anything. But if you look at budget versus actual, all of a sudden that report becomes actionable. Now I know I got a shortfall in revenue against what I expected to be there. It also gives you the opportunity to flag that if somebody spent $683 on an AT&T bill that you weren't expecting, you're going to see a variance. The bill is usually $800 and now it's $1,400. Why is that? So we suggest a budget for a lot of reasons. It's the difference between success and failure. A lot of businesses struggle. It's because they're driving blind. They're trying to make decisions based on the bank account or just a basic income statement. But to me, that separations of duties is the single most important function. If you are the person who's doing the billing, creating the invoice, shouldn't open the mail and make the deposit. Why? Because they can take that cash and go and issue a credit if they're if they're the bookkeeper responsible for everything. If you're doing payroll is one that requires real focus. If your office manager or a bookkeeper or controller or accountant, whatever you call your trusted financial person, insists on doing the payroll themselves, that's a red flag for me. When you look at ADP and Paychex and even PEOs like Insperity, I can't do what they do at their cost. It's cheaper for me to use a payroll service than it is to have my employees, and we do bookkeeping for a living, to have my employees run a payroll using one of those third-party service providers. They make a lot of their money on the float, on the tax payments. And so when somebody says, no, I want to do it in-house because I want to make sure it's right, or I don't want to spend the money for a payroll service, that's a red flag. Payroll is one of those. I've got a great story on a payroll fraud that just blew my mind for its ingenuity. I mean, I hate to even share it in case there's fraudsters out there, but business owners really need to be aware of. You pay payroll, and the business owner's signing all the checks, and he looks at the check amounts, and the net check, shows $485.76. They might have a gross payroll of $600, but the payroll just shows the net amount. And then each month or every week, whatever size business your payroll tax deposit is due, that's usually a big number because you're withholding cash from each employee. And the amount of cash that you withhold is not based on a formula. It's not just like FICA 7.65%. It depends on, are your employees married or single? Do they have 0 deductions or 99, right? So the amount of money you deposit is really subjective. And what she was doing was she was adding an extra $5,000 twice a month to the payroll tax deposit. When the payroll tax deposit's $60,000, you don't even notice it. And you can't look at the number and say, why did it go up by $5,000? Because it's like, oh, well, some of our employees reduce their withholdings. Increase their deductions and reduce the number of exemptions. And then what she did was she applied that extra $10,000 a month to her Social Security by revising her W-2. And then she claimed a refund on her personal tax return for $120,000. The business owner will never see it because she had the ability to enter the payroll, approve the payroll, and then she reconciled the payroll tax returns. So she just plugged the deposit against her Social Security. That tells you, how easy it is to have this money disappear. You won't even know.
That's an evil genius right there.
I know.
That is insane. Now, I would imagine they're uncovering these types of frauds if they're not seeing it because the business is healthy, has a lot of cash flow, unless they bring in a third party, or they can look at someone in that role, assume what their typical lifestyle should be, and then realize that their lifestyle is out of control. Is that how it's often discovered?
It's actually discovered by accident. This report to the nation is really, really great because it makes the recommendations of what you should do. The number one thing, believe it or not, is after having the tone at the top, right? If you set a culture and says, look, we're going to have open, honest communications, especially around difficult issues, right? That's one of GrowthForce's core values. By setting up a hotline, that's the single number one way that fraud got uncovered. An anonymous hotline that goes right to the top, where you can leave a voicemail that just says, hey, you need to check this out. And with a commitment that there will be no retaliation. When somebody sees something, they'll say something. If they have to actually tell a human being, they talk to their spouse, and at home is like, you know what, I need this job. I don't want to piss off my boss. I don't want to create a problem with this coworker, whatever it is. Humans tend to be conflict avoidance. By having a hotline, it makes it easy for them to be able to spill their guts and say what they see.
Wow. What is the next step if someone is suspecting this? Is that bring in outside party? Is it bring in counsel to button up things to start to prepare? What is the next step?
I typically would start with your CPA because you're talking about financial fraud more than anything else.
Correct.
And what you've got to be able to do is, I'll use QuickBooks as an example since they got 88% market share. What you want to go in there is look at the audit report. Under reports, under accounting, there is an audit trail report. And what that does is it shows every single transaction in QuickBooks, every modification of every transaction, every deleting of a transaction, every transaction is in there. And you can filter that by user. And then you can filter it by date range or by type of transaction. So if you suspect that somebody is deleting an invoice or editing an invoice, you can go in there and do a report and look and see who's done what. And that will help you be able to see how big of an issue you've got. That's the first step.
Excellent. One of the next steps that I would suggest for our audience is to go to your company's website, go to growthforce.com, take a look at the material they have on there. On this podcast, the purpose of our conversations are to help business owners to grow, but it's also to arm them with the tools that they need. And a part of growth is protecting the things that you have done. I've seen it happen so many times where a founder has done something that's been they've had a lot of progress, and something unjust comes along and takes all away from them. It's horrific.
Yeah, on our website's got a lot of resources. It's growthforce.com, GROWTH force.com. We've got a resources section, and fraud is one of the places on there. We've got, and in fact, it's growthforce.com/solutions/reduce risk is the fraud page. But it's got a CEO's guide to reducing fraud. So it shows you step by steps on how you can detect it and then prevent it to reduce your risk. We got a webinar on how to understand how fraud happens. I go through all the top ways that people get ripped off, and then a checklist on how to prevent it. And then we've got a separations of duties chart where you can look at, if you got a 2-person accounting department, or let's say you have a 1-person accounting department, everything is one trusted person. What do you need to do? Or what do you need to ask your CPA to do? If you've got a 2-person accounting department, how can you separate those two things? And then again, what do you need to do, or ask your accountant? And then if you've got 3 people, how do you separate things to make sure you're protected? So I think that's designed to help business owners protect their profits.
Extremely helpful. I'll make sure to put that inside of the show notes. And I really want to thank you for taking the time to educate our listeners today. And if any of you are suspecting any types of fraud, or you're seeing that happen, right now is the immediate time to take action. And then again, take a look at the link in the show notes to growthforce.com. I'll put that there so they can get in touch with you. Or
they can email me as well at Stephen, STEPHEN, at growthforce.com. Happy to answer any questions. We're also on LinkedIn. It's Stephen King, PH, Stephen King CPA, or at skingforce at Twitter if anybody wants to reach out.
Perfect. Well, I appreciate you putting those resources out there, and I hope that we're able to help several listeners from this episode.
Thanks, Spencer. Thanks for having me.
My pleasure.